Hey, everybody, and welcome back to another episode of the Indy Investor Pod. I got Nick Giuliani joining me here today. It's always a pleasure when I can have him on the pod here and we're just get together with him. I just like doing this episode because I get to talk to Nick. I get to spend a half hour with Nick and talk real estate and talk about all kinds of stuff. So, man, thanks a lot for joining me again. Love having you on here.
Yeah, thanks for having me. I really always enjoy our conversations. Heck, we have coffee and we could record those for the
I know,
podcast some of these
exactly.
days.
Yeah. So very cool. We had coffee last week and really just kind of came out of that and be like, oh man, we need to do an episode and talk about this and stuff. Like I said, we should just recorded that conversation and put it out, but that's all right. So what we want to talk about is, just kind of the BRRRR strategy in general, BRRRR deals, the BRRRR strategy, analyzing mistakes, things like that. When it comes around these, I feel like everybody has a little bit different way of how they're doing it and what they consider, a good BRRRR deal and stuff like that. I do want to talk to Nick about this because he is doing this, for himself, and he's been successful through this, but he's also helping other people do it as well. So I want to kind of dig into that towards the end of the episode too, of just how he's helping other people and stuff. But Nick, let's just start off with just what would you consider like a perfect BRRRR deal? So you have I know you're an analytical guy like me, so I'm sure you have like your little avatar box and what you like to play in and stuff like that. So what does that deal look like?
Yeah, absolutely. And just, taking one step back, just in case anybody's not familiar, I know you've got a really informed audience, but BRRRR stands for buy, rehab, rent, refinance, and then repeat. So it's a way of adding value to properties in order to minimize the amount that you have locked into a deal. It's really, really good in a lot of cases for maximizing your total return on your dollars.
Yeah.
But it's not necessarily the strongest cash flow play in the long term. You'd still get all the benefits of appreciation, generally some cash flow if you've done it correctly, loan pay down, tax benefits, all that inflation hedging piece. But it's one of those things where you're making a decision to re-leverage a property at usually a higher dollar amount in order to drive down how much you have locked in a deal, which if you do that, then your mortgage on a monthly basis goes up. So yeah, with that in mind.
On that note too, just kind of getting into that of just like, and I feel like some of the people that really maybe struggle with the BRRRR strategy is because going into COVID and things like that, they realize like, oh man, if we're not getting that rent or whatever, we might be over leveraged on these. So really when you are analyzing those deals and figuring that out too, when something like COVID happens, we can never predict, but making sure that you're not setting yourself up for something like that, where you're leaving some money in the deal if you need to and stuff like that, just be a little careful on that.
Oh, absolutely. Yeah. COVID hit us like a ton of bricks initially. Now, granted, things got better throughout it, but we were in a really lucky and a blessed position that we had significant reserves. But yeah, to your point, don't get into one of those over leveraged situations where you don't have any cash to weather a storm. But yeah, definitely a risky proposition, but a really good way of growing very, very quickly. And that's how we've been able to do what we do. So to your question, what we generally look at from a BRRRR deal, the perfect BRRRR is anywhere from having an all-in cost of 75 to 80% of the after repair value of the house. And so what that consists of is the purchase price of the home, the rehab cost, the cost of insurance, the cost of any financing I might have during that construction period. I want all of that to be anywhere from 75 to 80% of the after repair value of the home. And generally speaking, what we're looking for is rentals that will appraise on the back end anywhere from $130,000 to $170,000 in rent, anywhere from $1,100 up to, let's call it $1,500 is generally our buy box that we're pretty comfortable with it at this point. From our perspective, we have quite a bit of construction experience. We're willing to take on just the ugliest properties, the ones with the foundation issues, the roofs that are going bad. We're willing to kind of go a step above the just the cosmetic stuff. And the reason for that is we're not afraid of it. We understand there's a number associated with it. And, we've built relationships with a variety of contractors who can go and give us accurate estimates. And so that's one of the things that I know a lot of early investors hear. They hear, oh my gosh, it's a foundation issue. It's going to be $50,000 to fix this house. I've had foundation issues cost like $1,500. But you better believe that I use that in my my negotiations with the sellers whenever I get that opportunity.
Yeah, definitely. I think that's something that I know, And you're a unique case too, because you're coming from California, coming out here to Indianapolis, and as you're getting ready to purchase another house here, and we're going to consider you an Indiana resident, of course, here soon, which is awesome. But I think a lot of people that are coming from maybe like that are investing out of state, from California or Phoenix or some of those markets, where they're not familiar with basements and foundation issues like we have here in Indiana. Like, we're used to it here. Like there are companies that's what they do. They fix foundations, and they're used to that and stuff like that. So it's not something to maybe like that you should be super scared about. It's something you need to consider and something you need to throw in your numbers 100%. But there are people here that are used to dealing with those. And like you said, you might come out of like $1,500. Could it be up to 15,000? Yeah, it definitely could. But that's what you got to figure out and have that team go in there and kind of analyze and stuff. So, yeah.
Absolutely. And to that point, there's a number for any deal. There's a number for every house that it will make sense for you. Maybe not as a BRRRR in all cases, but in a lot of cases, you can generally find that number. And I've found that being as transparent as humanly possible, bringing scopes of work to my sellers. Heck, I've done that with you guys in the past, where I've said, hey, I know I was under contract at X. Like I did my best on the front end to estimate it, but it's going to be X minus whatever. Hey, is there any room to negotiate here? Or unfortunately, this one doesn't make sense for me.
Yeah. And you should do that as a buyer. I mean, that's what I do as a buyer too. And I'm negotiating the same thing you should be doing too. And that's up to us then to be like, hey, Nick, sorry, we can't, we don't want to accept anything less than this. I think we can get this price for it. We're going to put it back out, or do you want it at this price? Or it's, I understand. Like, we didn't quite see that, or we didn't know that. Yeah, let's go ahead and, renegotiate and come down on that price and stuff. So I think as a seller, when you are, or as a buyer, when you're informed on there's a reason behind what you're offering and stuff like that, it just gives you more power, more authority. And just, it's all part of that relationship too. Like you said, you've built great relationships. Like that's what it comes down to. Like, I want my buyers to come to me informed on what's going on with their property. I want them to be happy with the property they're buying. So,
yeah, absolutely. No, I think to that end, it's all about building out that core four, whether that's a deal finder, an agent, a wholesaler that you particularly like. You've got your property manager who can help you understand what a property will rent for. You've got your contractor, and then whatever your lending team is. And I think that's if you've got those four in your back pocket, there's no reason why you shouldn't be successful kind of going through the entire BRRRR process.
Yeah. So love it, man. I think that's great. This is definitely the four things you need to stand on there and stuff. So when you're talking about those four and getting your numbers and doing that stuff, how are you going about kind of analyzing those deals and getting your numbers and being, I guess, cohesive with those core four as well?
Yeah, that's always the tough part. You want to be really conscious and cognizant of everyone's time. There are tons of people looking to either start investing or continue their investing careers right now. So being really kind and generous with your time on the front end so that you save your team time on the back end, I would say is kind of my superpower, my team's superpower on what we do. So generally speaking, we will go and do our own full analysis on a property based on the photos. We'll go and we'll go on Zillow, we'll go on Realtor, we'll go on Redfin, and try and create what we believe the after repair value is. We've gotten pretty good now at looking at photos and getting an estimate of, within 15%, how much a place is going to cost to fix, just based on the visible items. Obviously, if there's foundation things that aren't going to show up in a photo, if they don't happen to show that the water heater is 1,000 years old, I'm not going to be able to estimate that, but we can get pretty darn close. So what we do is we generally will come up with what we are able to offer based on, again, those perfect BRRRR numbers that we were just talking about, that 75 to 80%. And just based on the photos and the scope of work that we put together. At that point, we are then willing to reach out to the deal source and give them, hey, this is the price that this one makes sense at, whether that's they're asking or slightly less. And this is how we came to that. Are you willing to go under contract? And so that's generally how we approach it. And what I think you'll see there that might be different than what a lot of people do is we actually don't send our contractor out until we're under contract. We're in kind of a blessed position that we've done quite a few projects. We have generally good estimates. But there are so many deals that don't make sense. We analyze probably 15, 20 properties every single day. And if I was to send my contractor out to 15 or 20 properties, he'd fire me immediately. So we try and do our best, and only once a deal is real do we actually send them out there. And we don't even get the lender involved. We don't get the property manager involved until we're under contract and we actually have a real deal.
Yeah. Yeah. I think part of that coming from a seller, then when, I hear some people might hear Nick saying like, oh, we don't send our contract out. Like, well, why would Brian get a contract under or a property under contract with him if he doesn't know if he really wants it or if his numbers are going to work with him? Because he's built that relationship. He's, before we even did a deal, we knew about he showed us, kind of what he's done before, kind of his credibility packet. We knew what he was able to do, the time frame that he was able to do and stuff like that. So he was able to provide it with us. Like, I have no problem put a property under contract with him now, knowing that like, hey, if his numbers don't work, then it's not going to work. And maybe I need to analyze it again too, because I know where Nick's numbers come in at now too. So it's one of those things of like, because he's talked about that before, of building that relationship and knowing how to work with people. He's been able to do that with us and multiple other people throughout the city. So that's success for him. And he's able to and do that model. If he just moved here and just started doing deals, would he be able to do that? Maybe not. He might need to, do something else and get some credibility with those people and build those relationships a little bit more. But now that he's in that position, he's been able to do that, and it's really helped him out for him and for us actually on even the people that are selling properties as well.
Absolutely. And to that end, when I'm sending these notes to you guys to get it under contract, I'm specifically telling you, hey, this is what I think I will make on this property. This is how much I think it will cost. Like I'm very transparent in those situations. And if you've got a good deal finder who's more about building those long-term relationships, like the Simple team here, they want you to make a lot of money on every deal. Now they need to make their money as well, but they want repeat customers. It's what is it, 10 times more expensive to get a new customer versus an existing customer. Simple's pretty smart about that stuff, and they're not going to try and take all the meat off the bone.
Yeah. So we do our best with that. We'll make a little bit on the side, but no. So all right. So let's say you get your you get your contractor, you get under contract, you get your contractor in there, your numbers make sense and stuff like that. Like what for you? What is it like? What's that next step then? Or like how do you know like, yep, this is on board. I want to do this. Like makes sense for us. Like what's that next step for Nick?
Yeah. So I kind of break the next several months down into 5 distinct periods. There's the day one, hey, you're under contract, congratulations. Now the work really starts. Immediately you get your contractor through. As soon as humanly possible, you get that scheduled. You schedule the inspection at that same time. And then you also have to reach out to the title company. At that point, it's really time to get the wiring information, get the earnest money over to the title company and start really moving. What you're going to identify here very quickly is that during the escrow process, it's a lot of hurry up and wait. And so unfortunately, that first day is absolutely crazy. You need to get that contractor, you need to get your inspector through as quickly as you possibly can, and then start figuring out how you're going to fund that deal, whether it's going to be cash, whether it's going to be private money lending, whether it's going to be a traditional lender, something in between. That's all needs to kind of start happening immediately. Then, during the escrow, you're getting that scope of work back. One of the really important pieces that I want everybody to take away from this entire conversation is that you shouldn't be the holder of all the information. To the point I had earlier, I was saying that we share what our rehab numbers are. One of the things that we really, really like to do is we get the scope of work and we get the inspection report and we send it to the other. So we send the scope of work to the inspector and we send the inspection report to the contractor. We say, hey, is there anything critical here that we're missing? Can we make sure everything's on there? And I make sure the two of them are talking during that entire process, because at the end of the day, I don't know anything about construction. I can barely hang a painting on the wall, but I do have 2 people on my team who are independent and are generally looking out for my best interest. So that's one of my biggest recommendations. And then start worrying about the insurance and the lending piece.
Real quick to that point, Nick. I think that is important, because I feel like a lot of people don't necessarily fully comprehend that of when you are going through something like this. Of like, okay, one of the steps in the BRRRR strategy is rehab. Like you don't have to be out there swinging hammers or going out there and doing some of that stuff. And I think people know that, but kind of in the back of their head, I know a lot of people do like to control situations and they end up getting involved. And sometimes you end up messing things up just a little bit more. But yeah, it's possible for you, like Nick's saying, like he has trouble hanging a painting. Like that's where you're coming from. Like you don't have to have the know-how for do the construction or go out there and swing the hammer yourself. Like let your teams do that. That's what you have them for. That's what you're building those relationships for as well.
Absolutely. Yeah. Yeah. Don't ever be the only person with the information. That is my biggest recommendation. Give it to as many people as possible. Heck, give all the information to your lenders. Give all the information to your insurance agents. These are people who live this stuff on a daily basis. Yeah. And if they're going to red flag something, it should probably be a red flag for you. So that's generally my advice there during the entire escrow process. The only other thing during the escrow process that I really think people need to think through is identifying the utility companies. If it was up to me, my tenants, my contractors would be working in the dark because I would never figure that out. Thankfully, I've got a couple team members who handle that on my behalf. But yeah, I definitely think that's an important piece, and make sure that you take the time to actually call, because you don't want to get your contractor out to the job site and realize they don't have power, or realize they don't have water, and can't actually do any of the work that you've paid them to do.
Yep. And can that happen? Yes, 100% of like, oh, well, the electric was turned on yesterday. Oh, what was in the seller's name? Now we need to put it on. Like you need to make sure you get that figured out. Very, very important stuff. So, all right, Nick, let's say you go through and you actually purchase that house. What's that next step then? So the house is yours. What are you going to do next?
Yeah. First thing is one, you make sure the utilities are set up. Two, you set up your security system. Unfortunately, break-ins happen in vacant properties, particularly here in Indianapolis. And so that's one of the first things I highly recommend. It has saved me literally thousands and thousands of dollars in eviction fees by just having that $29.99 Simply Safe subscription. Highly recommend that you do that. You change the locks too. While you hope that the sellers operating in good faith, that whoever they purchased it from are operating in good faith, you don't necessarily know. And so to that same end, you want to lock that door and make sure that you and your team are the only ones with access. For me, I always make sure that I put up a Giuliani real estate sign there in the front of the house, so that heck, if there are any direct to seller opportunities, I will absolutely take that up. And at that point, you need to set the exact schedule and payment schedule with your contractor, and make sure that he or she is going to be hitting specific goals. Make sure that it's based on work completed, not time or anything else. Heck, the weekend's coming up, they need a couple $100. You don't do it that way. You make sure it's based on work completed. And generally what I recommend, especially for the out-of-state guys, which I know is probably the majority of this audience, I recommend having somebody actually walk the property with the scope of work in hand, whether it's a property manager, whether it's an inspector. If you've got a good relationship with an inspector, have them circle back at their convenience and let you know what's been done up to code, so that you understand what should be paid out.
Yeah.
Yeah.
Yeah, I mean, I think that's really good advice. I know people struggle with that a little bit of working with contractors and kind of figuring out how to work with them and stuff like that. Like, don't pay for the work up front. Make sure the work gets done and then pay for it then, stuff like that. Do you have to pay them for materials? Yes. That's something that, take that down and, get that paid for and understand that and stuff. But when Nick's talking about that schedule and that payment schedule and due dates and things like that, that's important. Okay, this is a due date to where we're going to pay out a draw on this, but this is where we're going to pay you guys out on this, but this work has to be completed. So that's very important, that stuff, and making sure they understand it as well, going through this thing. So too many situations where we've seen people, unfortunately get, pay for the work up front and it not get done or not get done right, or, not get done to like 90% of the way, or all those things. So just be careful of that and just be upfront with all that stuff. And that's being super transparent right from the start, like, hey, this is how it's going to work. And if you can't work like this, then we can't work together. It's okay to say that. So.
Yeah. And let me tell you, if you don't do that, I'm probably going to buy it at 50 cents on the dollar on the back end and make a killing, because that's literally what just happened. I have 2 properties hitting the market that happened to people that we just finished flips on. So yeah, it does happen. And sometimes you have to kind of play hardball with your contractor if they're playing hardball. But to that end, always be willing to protect yourself.
That's kind of interesting. I want to talk about that for a second here. Is that I've noticed that kind of a change in that a little bit of I know like 2-3 years ago when I'd be analyzing deals all the time and stuff like that, and I would see a rehab project that wasn't quite finished, my thought always went to is like, oh, there's something more that needs to be done, or there's something bigger that I didn't know about it. My mind shift has changed where I feel like there's so many rehabs going on that now it's like, oh, what contractor were they using? That something that was is more like a contractor issue than it was like a bigger issue that they can come up with and stuff like that. So I would always consider that when you're analyzing deals, like just because it looks like a rehab's not quite complete, not necessarily because it's a house problem or anything like that. It might be a people problem, and those are ones that I love to buy now because I know I can sell somebody that can finish that up and make a great property for somebody. So
Absolutely. Yeah. I like solving people problems. Those are easier.
Yep, definitely. So, all right, Nick. So, well, yeah, let's take us through that next step of kind of what you're going to do next. Of you're working with your contractors, getting them through. Let's say that project is completed, and what are you doing next, man?
Yeah. So last couple of things that I always make sure to do, log all of your receipts and warranties. Make sure that you have a really trusted system. I use Notion. I know a lot of people use just Google Drive or something like that. I think that there are lots of really good opportunities for people to do that, because at the end of the day, things are going to go wrong on your projects. And you want to make sure that, hey, I don't want to pay for fixing the roof twice. Let's make sure that you're covered off. So that's a big piece. About a week before my rehab is scheduled to be done, I always like to send a landscaper through and make sure that that place looks gosh darn beautiful. And then the last thing I always do now, I know that there are some issues with seasoning periods, so make sure that you have a relationship with a lender and you're timing it properly. But about a week or a week and a half before my rehab's done, I actually start the conversation with my lender out here. Happens to be a no seasoning period lender, which is fantastic for me. But with how backed up appraisals are right now, starting that process at about a week and a half out is about the right amount of time just to make sure that the project is finished. And in that situation, I always hand over what I believe the comps are. I have my agent pull a full CMA for me so that I can send that over to them. I have my property manager send me a full rental report so that I can send that over, because they lend based on the debt service coverage ratio. Again, this is me trying to provide as much information with my team members as humanly possible. One, because I want them to have a good picture versus what they might be imagining. I send them all the photos, but then on top of that, that kind of kicks the process off. We get the appraiser through the property as soon as it's done. And I, again, hand over all this exact same information to the appraiser. Either I'm there at the door or my property manager is there at the door to hand this information off. Because at the end of the day, I'm sure you've seen this as much as I have, Brian, appraisers are definitely influenceable. And you in this situation are trying to get the highest possible valuation so that you can, again, reduce how much you have locked in this deal. Generally, what I've found is when you're buying a property, it's very easy for them to figure out the market value. It's whatever somebody has been willing to offer. In this situation, you have to tell them essentially what the valuation is. And I've seen huge swings between two different appraisers and two different experiences. So make sure that you own as much of that as you possibly can. And then finally, you get your property manager through and get that sucker rented. But I generally, and again, this is how I like to approach it, I want to get the appraiser through before I get a renter in place. I love my renters. They're fantastic. I really appreciate them helping to put food on my table. But they're not always as clean or as organized as I would like when an appraiser's walking through.
Yeah. I think it comes into like just being proactive about all this stuff. And, I see a lot of posts out there and a lot of things that people are having trouble with appraisers right now. Like, well, what kind of what have you done to kind of help them out? Like two little things that Nick said right there that are very easy to do is they give their appraiser the information before they go into that property. Say like, hey, these are my expectations. Right away, that appraiser's in their mind's like, oh, this is what he's thinking. Okay, let's make sure he's on base. And if he's not, then they'll have a conversation. It's a different conversation too than like, hey, this is just the number, and you're going to go buy this. Then also too, like you said too, getting that appraiser in there before the tenants get in there too. That's great as well. Like, oh man, well, I'm not going to have rent for that extra week. Well, that's okay. Like, get your appraiser in. That's the more important number in this scenario than getting that person in there like day one or whatever it may be. So doing those proactive things, like, definitely just help out a little bit and stuff. So awesome then. And then you said too of like giving basically that kind of heads up, your timeline of, I think you said a week and a half to 2 weeks of like letting your lender know, like, hey, here's the timeline that we're on. Here's what's going to happen. That way everything's, lined up, because someone that's selling a lot of properties here in Indianapolis, I know it gets to that, hey, wait, this is supposed to close on the 29th. Oh, wait, no, the lender needs or the appraiser needs or the, all this stuff. Like, okay, yep. Like we need to be proactive about it as sellers as well, but love it when my buyers are proactive about that stuff and get everything lined up. So, yeah, man, good stuff. And then when it comes to that, kind of that lending process and things like that, like what are some things that I think maybe even before all this stuff, as we're talking about being proactive, what are some things that somebody that is looking to do the BRRRR strategy or getting this, what are some things they can be proactive about of like when it comes to lining up a lender? What are some of those questions that maybe they could be asking or knowing that they're finding the right lender for their situation?
Yeah. I'll tell you, I've sold quite a few properties, and at this point, I'm not willing to work with anybody who is going to use one of these coastal, like a Bank of America or anything like that, for their lending. The reason for that is that those particular lenders, one, aren't as adept at doing these low dollar value loans, but then two, they actually tend to take forever. So one of my biggest recommendations for people is find a local lender who you like to work with. I'll plug a couple of people who've been really awesome for me over the years. I use Tony over at IU Credit Union. He's amazing. Jared Shore has been absolutely incredible with me buying my forever house here. So those are two people who have an understanding of what investors are looking for, and will generally not balk at the dollar values that we're going to be dealing with here. Some of the questions you should definitely be asking, if you're going to do traditional lending, you should probably have an understanding of what the seasoning period is. For anybody who's not familiar, that's the gap between the day you purchase it and the day that you refinance it. A lot of banks will have a minimum of 6 months before you can do that and change essentially the appraised value on the home.
Yeah.
So something that you should definitely be cognizant of. See if your lender has any workarounds to make that work for your particular system. You should also have an understanding of kind of what that time period is going to be. I know for me right now with my business loans, it's going to be about a 3-week refinance. A lot of other lenders are sitting closer to like 6 or 8 weeks on the refinance. So you should have an understanding of that, because that's going to impact your total process here, and potentially how long it's going to take for you to get a renter in place. To that earlier point, you should talk about rates. You should talk about amortization periods. Those are generally the ones that I like to think through from a qualifying a lender, and then make sure that you have your stuff in order on your side. I know every time I'm going to go get a loan, I need my last 2 W-2s. I need my last 2 tax returns. I need my last 2 pay stubs. I need the last 2 statements for each of the bank accounts I'm going to use. I need all my retirement accounts. So I have all that stuff, my driver's license. I have all that stuff literally in a folder that I just then update with the newest documents that as needed. But then I can just send a Google Drive link over to Jared or Tony, and they can tackle it and take it away. So making sure that you have your stuff in order on your side is definitely going to help speed the process along.
So awesome, man. That's great stuff. I always enjoy hearing you talk about through this step, and I think you do a great job of educating and helping people out through this. So, and it sounds like you got all your stuff lined up and everything's all nice and perfect. So no mistakes ever happened during this process or anything, right? Or you probably never learned from anything.
I've never made any mistakes. I've never had a bad scope of work. I've never had anything come up during the rehab. It's cost me money. If you guys can't tell, there's a lot of sarcasm there.
Yeah. So as the reason that you're like, Nick's talking about something like this is just having a folder and updating it every 2 times of getting a pay stub. Like, it's because he's been through that process of like, oh man, he needed this and he didn't have it right away and all those things. So Nick, what are some of those things that maybe you made mistakes on in the past that just made, now that you've learned from it, has made this process a little bit easier for you as you're going through it?
Yeah. My brain goes a couple different directions with that. One is I didn't look at this as a giant checklist. I looked at a BRRRR as like one big process and didn't actually break it down into its component pieces. And you know what? That burned me the heck out. Once I actually sat down and I literally checklisted everything, that made the whole process a whole lot easier. Some of the other big ones that I would say we've made mistakes on is, I've trusted somebody else to run my CMA or my competitive market analysis. And they were a little bit more aggressive than I would have been with the numbers. And I didn't end up losing money on that deal, but I didn't do quite as well. And then some other ones is I've hoarded information. to that end, I didn't share my inspection report with my contractor.
Yeah.
So he was operating on a very different piece of information. And I ended up on the sale of that property. It didn't happen to be a BRRRR. I ended up having to come out of pocket pretty substantially to fix some things that I should have addressed on the front end
Yeah.
with the inspection. And then the last one, and I don't know if I joked about this one with you the other day, is I wasn't as organized on something that I really should have been. I own these 8 properties, incredible properties out in Avon. I would have sworn were in my LLC, and let me tell you, they were not in my LLC. And it really screwed up my debt service coverage ratio, which is my DTI, which is something that lenders tend to use to qualify you for a loan. And so it's been a little bit more harrowing on my most recent loan, just because I had forgotten that I'd done that. So always make sure that you have your files and your documents in order, so that you don't miss something like that.
Yeah. And that's something too, I think is really good, is you're sitting down with, whenever I work with anybody, I always want to work with someone that's going to help educate me on something I don't know about. So for example, if I'm working with a lender, they're going to know more about that part of the business than I am. And I want to learn from them. So I'm going to give them, be open and transparent with all my stuff. Like, hey, here's what I have here. These properties are in this LLC. These properties are in this LLC. These people are, this property are under my name. Like, all these stuffs, and basically like, what's the best situation for me? Let them help you with that. Let them talk you through that. And granted, it is your decision at the end of making that, but maybe they can help you and give you some perspective on what might set you up for the best situation. So I know when I'm working with anybody, those are the things that I'm looking for, is like, who's going to help me through this situation? Who's going to help educate me on, getting me to that next level as well. So that's one of the things I'm going to throw out there. Nick, with that, I know you're starting to work with some other investors now too, and helping them through this process of helping them do a BRRRR and talking them through it, or walking through it, or even they're BRRRRing with you and stuff and partnering with you. What are there's a reason for that. There's a reason that some investors are maybe having a little bit of trouble and they need somebody to help them with that process. What are maybe some of the things that you see, that maybe some of the big struggles that people are maybe having with this process, doing it on their own, or some of the mistakes that they've made? You're like, man, okay, we got to correct this right now. We got to fix this, or whatever it is. What are some of those maybe top 2 or 3 things that really stand out to you?
Yeah. My brain immediately goes to credibility. And that's a hard thing in today's market. If you're just starting out to build credibility out here, there are so many wannabe investors out there that most of the agents out there are sick and tired of talking to again, and I say this not in a pejorative way, but the wannabe investors, the ones who haven't done it yet.
Yeah.
Same with contractors. Same with, I'm sure the Simple team gets to talk to a lot of new people that are looking to get started. So that's one of the things that I really always recommend to people, is that they start to build that credibility. If they were to come to you and I was just advising somebody, I would say, hey, bring a pre-approval letter, bring a proof of funds, bring the fact that, hey, I've already done my research. These are the neighborhoods I want. This is the after repair value. Bring that to the table from a credibility perspective. And that's kind of something that I can help people provide by essentially utilizing my existing teams that we already have, and my name at this point. So I would say that's kind of the biggest piece. And then number 2 is just not understanding how to break it down into very easy steps. At this point, I would say 90% of my BRRRR process, I'm completely hands off. And because I've been able to break it down into those steps and hand it off to some assistants who work with me. A lot of people won't have had that experience, won't have understood, hey, this is how and when things need to happen. And so that's, again, kind of an opportunity that I have to help people out there. I think Brandon Turner did an absolutely incredible job. Nobody needs to use a service like mine. They can go learn it all through his BRRRR book and David Green's BRRRR book. But I generally get an opportunity to help people fast track a little bit.
Yeah. And I will say, I do want to point out one more thing too, like, and people maybe not understand this or might not know this about you, and you don't have to, I'll put you on the spot a little bit here, and you can give me a nice a round number if you need to, or anything like that, if you don't want to share exact numbers or anything. But like, so how many properties do you own right now? And what was the
I think we're in the 60 to 65 range of long-term rentals. And I think we've got about 10 to 12 flips going right now, or BRRRRs projects in place.
Yeah. What was that? When did you start? How long ago was that?
We started in 2017. So
Okay.
all in, I think we've touched, because we have sold quite a few properties over the years. I think we've touched about 120 to 150 properties. I could go back and look through.
Yeah. So think about that and like what he's been able to accomplish. But then also too, I will add on here as well, Nick, you're still working a W-2 job, right? You
Oh,
still have your 9 to 5. So
absolutely. Yeah.
yeah. So for you people out there that are thinking of like, oh man, I don't have the time to do this or anything like that. Like if you want it, you got to make the time to do it. Or those people too, I put on the opposite end of like, oh, I need to quit my job and go out there and become a, full-time investor tomorrow. Like be smart about that. Like, do you really need to yet? Are you set up to yet? Because I know when you're probably refinancing these things, it probably makes a difference that you have that, that W-2 that you can refer back to as well. Right.
Oh, absolutely. Yeah. My DTI is certainly a lot better than if I was just an investor.
Yeah. Yeah. So, Nick, anything else that you want to point out or talk about before we jump off here today? I would love to give you an opportunity to just kind of talk about if people, if people want to, want to reach out to you to learn more about kind of what you're doing or, want to work with you on a project or anything like that, or have a project they want you to take a look at or whatever it may be. I would love to give you an opportunity to kind of give your information out as well. But then also if you have anything else that you want to add to that or, any last little thing you want to add on that we haven't talked about today yet.
Yeah, I think just the most important thing is it's a bunch of bite-sized chunks. I really want everybody to realize that it seems really big, but once you've actually sat down and done the process, it's very, very achievable for literally anyone. Anyone out there that's listening to this can pull this off. And yeah, just to that end, please reach out to me. My information is at giulionirealestate.com. It's GIULIONI for anybody who can't spell because it's a tough last name. GiulioniRealEstate.com. Feel free to book some time with me. No obligation for anything. I give away a lot of time to people looking to get started, and hopefully I can help a million people reach financial independence. That is fundamentally my goal. And yeah, looking forward to chatting with the audience.
So great stuff, man. Really appreciate you and really appreciate just your go-giver mentality with all those things. I think it's awesome. One last little thing I want to add on here, and just as Nick said this a couple of times, I just want to kind of put a bow on this of no matter what you're doing, being able to put a process behind it and get it on paper in some way, whether it's a checklist, whether it's, set up something in Google or set up something in something like Asana or a Lucid chart, or I have my process maps, or they're nice and neat and color coded and things like that. But really good example of, we just went through a process with our team of just changing locks. That's all it was, just changing locks on a property. And we did a process map for it. And we realized once we sat down with our team, even though it was basically one step, everybody was doing it different ways. And we had to go through and like actually get that process behind there. So who was doing what was the timeline, all that stuff. All of a sudden, a week later, it makes sense. Like everybody's on the right page. Everybody's doing that. So when you're taking a process that's multiple steps, like the BRRRR strategy, putting that whole process out and knowing what happens in what order and who's doing what is going to just make it be a game changer for you by getting that process out there. So, man, thank you so much for your insights. Really appreciate you, brother. And with that, that's a wrap for this episode of the Indy Investor Pod. And we will see you guys next time. Take care.